Hello and welcome to Pro Trader Strategies Market Commentary for Monday, February the 5th. Hope everybody survived the Super Bowl. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having all that out of the way, let's get it on with some economic data. Across the pond, we did get some PMI numbers, Purchasing Managers Index, which are pretty important. But across the pond, they usually look at their flash services PMI number as being the most anticipated number. It comes out earlier than the rest of them. The ones that we get now across the pond are usually revisions and things of that nature. It's already been said. But having said that, all of the Spanish, Italian, French, German, and basic European PMI numbers came out above normal or above what we were expecting. So well into the 50s, almost breaching the 60s in some points. Then we've got the services PMI for Great Britain, which is going to be one of their most widely looked at. They don't get the flash. Came in at 53.0, expected to be 54.1. Anything above 50 is expansion in the economy. Anything above 60 is doing really good. So then here in the United States, we got our ISM, which is Institute for Supply Management, non-manufacturing PMI, which is services. Came in at 59.5, almost getting to that 60 number. It was expected to be 56.5. This is the biggest number we've seen in about a year, I would expect. It's somewhere close to that. Last time we've been up into the 60s. And then we also have President Draghi speaking. He is the ECB president anyway. And that's about it. On to the overall markets. We've got crude oil coming off by about 61 cents. A lot of the oil stocks are getting beat up like XOM, and I'll talk about that here in a minute because I put on a trade on Friday. It's not looking too great, but I think I'm in a pretty good location. I'll talk about that here in a second. But crude oil coming off a little bit, back into this trend channel. You know, we settled down in that trend channel. I was talking about it. Once we get in there, it's going to be harder to get out. I would expect it to want to come down and test the lower band of the trend channel, even if it's just kind of a slowly trickle sideways for the foreseeable future. And then we've got gold futures upticking slightly. That's not uncommon with the equities as volatile as they've seen this morning. They've been bouncing all over the place this morning into positive and negative territory. All right, Bitcoin futures, we got to talk about this. Down over 1,100 points right now into that 7 handle. This is not looking too great right now because a lot of people have been buying this Bitcoin on credit cards. And you can't buy stocks or any other commodity for that matter on a credit card because of the volatile nature of that instrument. Well, there's been no real rule around Bitcoin. So people have been buying Bitcoin with borrowing money, whether it's a credit card or taking a second home mortgage to buy these Bitcoin. Well, think about it. If you bought the Bitcoin up here at 1,500 on your credit card, you're at 7,000. You are getting crushed plus the 25% interest that you're carrying on that. It is ridiculous. So credit card companies are stopping people from buying Bitcoin on credit cards. And that's another reason why we're getting this extra leg down is there is starting to be some self-governance around Bitcoin and what you can buy, and that's just the start of it before the SEC and things of that nature step in. So I think a lot of momentum losing in Bitcoin right now. Bond futures are down on the day, but you can see this is looking like we've kind of found at least a near-term bottom. I'm looking at selling some TLT puts or maybe some short calls or something like that, and TBT, which is the inverse triple leverage ETF. So one of those, I want to trade this momentum shift. I think we're going to at least get a little bit of a bounce here. I think it's just overdone to the downside in the bonds right now. onto the VIX. VIX, looking like it was getting into the 20s earlier today. I was like getting really excited, looking a little toppy here. A lot of volatility pumped into these markets. I was even looking at, I haven't seen so many different underlyings at 100 IV percent in quite some time, and basically finding something that is in the single digits is not easy to come by, at least on my watch list and the stocks that I trade. But everything, even ETFs at 100% right now. So I'm going to be playing a few of those. I've taken most of those ETFs off really quickly that I've gotten on when they had high implied volatility. So I'm going to keep playing that as well, especially because we're right in the right in the middle of the earnings season here. So VIX spiking higher today with most of the equities down. Dow, when I started this, was down 200 points. Now it's down only about 150. But you can see everything is pretty much legging down. This is the ETF, so it doesn't trade overnight. That's why that chart looks like it does. Then we've got the NASDAQ just slightly in positive territory by about one point. Call that unchanged for all intents and purposes. We're going to really have to see what happens here. We got the settlement inside of the trend channel. This could be just a breather. It doesn't look like it's either way. It's right in the middle from the high and the low. That to me is a signal that we are a continuation, just kind of taking a breather right now. We're seeing the E-mini S&Ps a little bit differently though, with this hammered doji at the bottom, not confirmed as a bottom, but that would be tomorrow, a settlement above the high here. That would give us a little bit of an indication that we're changing back, and that was just a short-term sell-off. But tomorrow is going to be a really important day, I think, for all of these equities. Looking at the breakdown of the E-mini S&Ps on a 30-minute chart last 10 or so days, you can see this yesterday, or Friday I should say, right into the close, just a massive sell-off liquidation into the close. Overnight inventory pretty much in line with neutral, I would say, but you can see on the morning after the open, we really made an attempt to make it a rally, and starting to lose a little steam right now. So that, drive for a rally was very short lasted, so it doesn't bode well for the bulls as far as I'm concerned. Equity is looking pretty bearish right now. All right, a few trades that I've done, and I have a very short leash on this, especially after today's market action. It's getting a little bit worse. In XOM, I went in and made a trade in there, and I sold the March 80 puts in there. And volatility really high. You can see volatility is coming out of it a little bit. But with those March 80 puts that I sold in XOM, I sold those for 81 cents. Right now they're trading just slightly over $1. Not getting the market direction I wanted. A lot of these support areas are not holding up. It's right at the value area, the point of control, where the most time and volume's been spent the past year. So I do believe that this is going to act as the magnet where it kind of slows it down. Give me a little bit of time to let these 80 puts breathe. But right now, very short leash, like I said. Not loving the fact that it's gotten below that 200-day moving average today. Like to see maybe settle above that 200-day moving average right there at the point of control. Give me a little bit of breathing room, if you will. And then the SPY this morning, we started getting that bit of a bounce off the open. I thought it was going to look more like a setup for a bottom here. Still is across the board for most of the markets. So I went into the SPY and sold the March 255 puts in there for $1.42. Right now they're trading about $1.20 or something like that. So it did get a little bit better, but I didn't get in fast enough. Those are the two trades that I've done. I'm going to be looking at earnings for today that basically come out tomorrow morning. GM is one of them. Yeah, I'm going to probably play GM maybe to the upside. I'm going to have to play that by ear. I'm going to do a little bit more digging on that one. Cummins is another one coming out with earnings. All of these automobile stocks, Cummins does make engines for like Deere and Caterpillar and stuff like that. So I'm going to look at all of those other earnings just to see how I think that Cummins is going to kind of match up. And then, we also got BP coming out. You could see what their market action was like today. I may stay away from this with XOM tanking. I mean, oil's still at pretty high levels. I'm really surprised that these oil companies are taking it on the chin right now. So I may stay away from BP. I'm not really sure right now. On any of my earnings trades, you're going to have to check it out on Twitter. I'll talk about that today. And talk about it again tomorrow, what I did. All right. So go to protraderstrategies.com and sign up for my daily market commentaries if you're just getting this on a trial basis, if you will. Also, Friday's webinar is going to be this synthetic short stock. This is a great option strategy because there's so many messy things that go into like shorting an actual stock. I'm going to go into all of those things, how you can get around all of that mess by using options instead of just going out there and borrowing the stock. So check it out. Go to protraderstrategies.com. If you can't take that, take it easy.